Hey everyone, John Henry here from School of Trade, and today we're going to be taking a look at a long trade here on gold. Now I'm looking long at 1301.2, just got filled. Let me get my stop in place here. Now the reason I'm liking this move higher is just because we had this big burst in volume come in, had a little bit of a pause. Typically when you get that, you're going to get one more big push higher again. Now overall, you could be looking for a target up at 1306.7, but I'm looking at a 1-to-1. Oh, wow. Okay. That. Let me cancel my stop really quick. That went very fast. Holy moly. Sorry, it kind of caught me by surprise there that all of a sudden we had this monstrous move. That was like a 30-tick move in under a second. Wow, okay. Well, anyway, so like I was saying, looking long here, we got in long at 1301.2, got our target filled in literally like 3 seconds at 1303.9. Now, the reason I like this trade is we had this big push higher right before the open, and at the open we had a little bit of an inside bar, followed up by another inside bar, and we're just seeing a lack of conviction from one side or the other, but all of this pre-buying here gives us a big heads up that a lot of times you get these types of moves where you get this big block higher, you consolidate a little bit, maybe form a little bit of a trap to the downside, fake in some sellers, and then shoot right back up again. And that's pretty common. If you look over through the markets, through all kinds of different time frames, you get a big spike, a little bit of a ledge. You're either going to fail down for a spike and ledge pattern, or you're going to shoot straight back up and typically make a measured move of this here. Now, our risk reward on this trade, I was looking long here at 1301.2, stop was at the lows, at the 30-tick stop. So because of that, we could only go in long one contract to our first target here at a 28-tick target. So we had to keep it around 1-to-1, and because of the size of the stop, needed to be a little bit kind of conservative on the overall size. But looking at this trade, I mean, there was definitely a lot of people looking at it. You definitely could have gone for that 200%. It tagged it to the tick, even gave it a little bit of an extra tick. And I mean, all within a few seconds. So maybe you didn't get filled there, maybe you did, but you definitely could have placed a target there. Overall, just a gorgeous example of that type of trade where, again, you get that big burst in volume up, consolidate for a little while, maybe form a few bear traps like we had right there, and then just shoot straight back up again for another measured move. Because of the size of the stop, we had to go for a little bit more of a conservative target and conservative size, only going for one contract. But you get the idea. So overall, $280 on the trade, very fast trade. That's the kind of trade that you love to see. Immediate response within a few seconds from our entry to our target. Almost $300 on the trade. So $280 on the trade, very quick one. Always love those kind. If you have any questions about it, feel free to send an email to School of Trade. Don't forget to check out our trial at schooloftrade.com. And as always, we'll catch you next time.